Hello traders! Today I'm going to show you a 5-step support and resistance Forex trading strategy using the current Euro-US dollar spot price as an example. My name's Chris and I know that the majority of traders realise that support and resistance levels are really important, but they don't necessarily know how to use them correctly. Now probably like you, I started out by drawing lines on every single area of my chart and trying to take trades at every one of these levels. Now obviously this just did not work. But in this support and resistance strategy, I'm going to show you a 5 easy step method to identify support resistance levels plus how to use them as part of your trade entry strategy. Okay, ready? Here we go. So number 1 is to switch to a line chart. Now this is going to make your charts a lot clearer. The majority of trading platforms have the functionality to switch between several different types of charts. Personally, I use IG and the drop down to change it is located here at the top. Now once you've changed your chart, it's going to look something like this. Okay, number 2 is to establish the trend. So you need to find either an uptrend by joining at least 2 higher lows or a downtrend by joining at least 2 lower highs. Here it looks like the pair is in a downtrend, but to confirm this it's always best to zoom out as previous areas of the chart movement can invalidate a trend. Here we can see a third lower high which lines up with our 2 previous lower highs that we were just looking at, confirming our downtrend. Now points like these can cause confusion to the untrained trader's eyes, but it must always be remembered that when drawing trend lines in a downtrend, it is important to always try and join the highest of the lower highs. Okay, number 3 is to begin searching for support resistance areas. So this is really important. When searching for support resistance areas, always try to look for the major areas. That is, areas that have been tested at least 3 times or more. This offers a type of safety net because minor areas of support get broken a lot of the time. So start off with where the market is at the moment. Now immediately here we can see that the market has reached and bounced off a major support resistance area 3 times. Now this represents a great trading opportunity potentially, but before you go jumping in we need to take a few more steps. Okay, so number 4 is to plan ahead. Now, one of the biggest beginner mistakes is that they don't plan ahead. They jump into the market having done some due diligence and assume that they're going to make money. Whilst having targets is necessary in trading, it's also extremely important to plan for when things go wrong. Let's go back to our chart. So it may well be that the market does not respect this area of support resistance and breaks through. What are you going to do then? Well, this is why it's always important to have a plan B. In this instance, you should look for another area of support resistance that the market may come back to should your trend level fail. To do this, I always take the next high, which is here. Now, if we draw a line here, we can clearly see that this is another major support resistance level, having been tested 3 times. What's also important to note here is that the support resistance level lines up with our trend line, which can act as an added resistance level in a downtrend situation. If the market broke through our original level, I would be looking for a bounce off of this area just here. Okay, so what are your options? Well, number 1, you could take the trade now. Price has bounced off a major level and may well decrease further. If you take this option, it is very important to use a stop loss in case price moves against you. Number 2, you could wait to see if price breaks through our level and increases further and wait to see if price bounces off our next major support resistance level before entering a trade. This is certainly the safer option. However, you run the risk of missing out if the market decreases from that first level. In the end, it really depends on your risk tolerance level. But one thing is for sure, no matter what trade you take when trading Forex, you must always make sure you use a stop loss. So there you have it. If you work these steps correctly into your trading strategy, you will increase the amount of profitable trades that you take. With that said, there are even better steps to take which can potentially improve your results massively over a short period of time. Now I've put together a 100% free 3-step trading system to help you with this. So if you want to learn how to enter high potential trades that could drastically improve your results with just 3 simple steps, you can get this from poshenglishtrader.com/3 steps. So to get that, just type into your browser address bar poshenglishtrader.com/3 steps, and again this is going to show you how to enter high potential trades that could drastically improve your results with just 3 simple steps. So type that in guys, or click the link in the video description below. My name's Chris N, the Posh English Trader. I hope you enjoyed the video. If you did, hit the subscribe button, share this video with your friends, and comment below to let me know how successful you have been in implementing this strategy. Okay, until next time.